Would you like to invest in the future of mobility? Want a market-beating yield and double-digit dividend growth? Looking for a good deal on a great stock after it's pulled back by more than 20%? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. And make sure to stay tuned until the end of the video for a special news announcement. I want to tell you about a high quality stock that pays big, growing, reliable dividends. These growing dividends are funded by growing profit because this business is a leader in engines and power generation products. Mobility. It's part of the backbone of the American economy. If people and things can't move around, everything grinds to a halt. This company is a leader in legacy propulsion systems, and it's investing heavily in the future of propulsion. This positions them to continue profiting and continue rewarding shareholders with safe, growing dividends. I personally invested in stocks just like this one on my way to going from below broke at age 27 to financially free at 33. By the way, I explained exactly how I achieved financial freedom in just 6 years in my early retirement blueprint. If you're interested, you can download a free copy of my early retirement blueprint using the link in the description of this video. Getting back to the stock I'll tell you about today though, perhaps best of all, it looks undervalued right now. Price is what you pay, but value is what you get. Why is that important? Because buying a dividend growth stock when it's undervalued should provide for a higher yield, greater long-term total return potential, and reduced risk. With this in mind, I want to share with you an opportunity I recently came across in shares of Cummins Inc, which appear to be trading at a significant discount today. Cummins Inc, stock ticker CMI, is a multinational company that designs, manufactures, and distributes engines, filtration, and power generation products. Founded in 1919, Cummins is now a $30 billion by market cap manufacturing giant that employs nearly 60,000 people. The company reports results across 5 business segments: engine 32% of fiscal year 2021 sales, distribution 32%, components 25%, power 11%, and new power less than 1%. Cummins makes most of its money by manufacturing, distributing, and supplying components for a range of diesel and natural gas engines. Many different types of vehicles use these engines. This includes heavy-duty trucks, medium-duty trucks, buses, recreational vehicles, construction machinery, agricultural machinery, and watercraft. But that's not all. Cummins is also preparing for the future of mobility by investing in fully electric and hybrid powertrain systems, as well as hydrogen fuel cell technology. It might be easy to assume that Cummins is just an engine company. However, I think that's greatly oversimplifying it. This story is really more about mobility and power generation, and that's a bigger and more impactful story than you might think. For instance, everyday goods are often produced and moved around using the power generation products that Cummins manufactures and distributes. In a way, Cummins is part of the industrial backbone of the American economy. I think that's why Cummins has been such a successful story for more than 100 years, and with their ongoing preparations for exciting new chapters in mobility, the company is positioning itself for more success over the next 100 years. That augurs well for higher profits and higher dividends for years to come. Cummins has already increased its dividend for 16 consecutive years. The 10-year dividend growth rate is an impressive 15.5%. While impressive, it is important to keep in mind that more recent dividend increases have been in the 8% range. Still, that's plenty of dividend growth to go along with the stock's yield of 2.7%. That yield easily beats the broader market's yield, and it's right in line with its own 5-year average. With a 39.7% payout ratio, it's a well-covered dividend positioned for continued growth. I like dividend growth stocks in what I refer to as the sweet spot, a yield of between 2.5% and 3.5% paired with a high single-digit or better dividend growth rate. This stock is right in the sweet spot. Looking at business growth, Cummins increased its revenue from $17.3 billion in fiscal year 2012 to $24.0 billion in fiscal year 2021. That's a compound annual growth rate of 3.7%. Solid, not amazing, but solid. Meanwhile, earnings per share moved up from $8.67 to $14.61 over this period, which is a compound annual growth rate of 6.0%. Again, solid. Now, I will say that Cummins operates a cyclical business model, therefore results can be amazing or only so-so depending on the starting point and ending point of a comparison. For instance, Cummins was knocking it out of the park during the 2-year period leading up to the pandemic. The 2-year period since the pandemic hit has been more lackluster. One thing that Cummins has been fairly consistent with, no matter where the cycle might be, is buybacks. The outstanding share count is down by 23% over the last decade, which helped to drive a lot of that excess bottom line growth. Looking forward, CFRA believes that Cummins will compound its earnings per share at an annual rate of 11% over the next 3 years. This looks somewhat aggressive against the 10-year result. For additional perspective, Cummins itself is guiding for 6% year-over-year revenue growth for fiscal year 2022. It wouldn't be difficult for Cummins to get to high single-digit year-over-year earnings per share growth with this kind of revenue support. An 11% compound annual growth rate for earnings per share would be outstanding, but I don't think it's necessary to make sense of an investment in Cummins. In my view, an investment in Cummins is a long-term bet on mobility. What I think is particularly compelling about Cummins in this regard is the 1-2 punch that it offers. Cummins has a strong legacy business that's also being positioned for the future of mobility. It's a past-future combination that's exciting. CFRA states that its enthusiasm, and I quote, reflects our outlook for acceleration in truck production volumes in 2022 and 2023, as well as long-term growth driven by Cummins investments in electrification of trucks and power generation. We see electrification investments supported by developed economy governments pushing to reduce emissions and accelerate the shift to electric vehicles and electrified machinery, unquote. If you want the best of today's propulsion, you're probably going to Cummins. If you want the best of tomorrow's propulsion, you're also probably going to Cummins. With high single-digit near-term earnings per share growth being the base case here, and with the payout ratio being as low as it is, Cummins should be able to produce dividend growth at least in the high single-digit range for the foreseeable future. And when you're already starting off with a 2.7% yield, I see plenty to like about that. Moving over to the balance sheet, Cummins has a terrific financial position. The long-term debt-to-equity ratio is 0.4, while the interest coverage ratio is over 25. Profitability is both robust and consistent despite some mild cyclical bumps along the way. Over the last 5 years, the firm has averaged annual net margin of 8.3% and annual return on equity of 24.2%. Cummins strikes me as a great long-term investment idea in the industrial space, and the company does benefit from durable competitive advantages that include economies of scale, high switching costs, tall barriers to entry, IP, R&D, technological know-how, and brand power. Of course, there are risks to consider. Competition, regulation, and litigation are omnipresent risks in every industry. The company has a unique competitive landscape as they're often competing against some of their biggest customers, such as truck manufacturers. There's a high degree of exposure to economic cycles here. Cummins has customer concentration risk, with the top 4 customers accounting for approximately 30% of annual sales. There's technological risk. Propulsion technology could change faster than Cummins can adapt to, or in a way that's unforeseen. Any major changes to trucking and/or commercial transportation in general would impact Cummins. It's important to take these risks seriously, but I still view Cummins as a great business with qualities that more than offset the risks. And with the stock more than 20% off of its recent high, the valuation makes it that much more compelling. The stock is trading hands for a price-earnings ratio of 14.4. That is well below the broader market's earnings multiple. It's also quite a bit lower than the stock's own 5-year average price-earnings ratio of 17.0. And the yield, as noted earlier, is right in line with its own 5-year average. I valued shares using a dividend discount model analysis. I factored in a 10% discount rate and a long-term dividend growth rate of 7.5%. That might look cautious at first glance. It's less than half that of the demonstrated 10-year dividend growth rate. The payout ratio is low, and CFRA believes that earnings per share will grow at a low double-digit rate for Cummins over the next 3 years, opening up a path for like dividend growth. However, the 10-year earnings per share growth rate is lower than this mark. The company is very cyclical, and dividend growth has been decelerating of late. Speaking on that last point, it just so happens that the most recent dividend increase was 7.4%, almost exactly where I'm at. Balancing things out, I think I'm modeling in a reasonable long-term expectation. The dividend discount model analysis gives me a fair value of $249.40. The reason I use a dividend discount model analysis is because a business is ultimately equal to the sum of all the future cash flow it can provide. The dividend discount model analysis is a tailored version of the discounted cash flow model analysis, as it simply substitutes dividends and dividend growth for cash flow and growth. It then discounts those future dividends back to the present day to account for the time value money, since $1 tomorrow is not worth the same amount as $1 today. I find it to be a fairly accurate way to value dividend growth stocks. Morningstar rates Cummins as a 4-star stock with a fair value estimate of $242. CFRA rates Cummins as a 4-star buy with a 12-month target price of $275. We're all roughly in agreement here, averaging averaging the three numbers out gives us a final valuation of $255.47, which would indicate the stock is possibly 22% undervalued. Here's the bottom line, guys. Cummins Inc. is a high-quality industrial company with an excellent legacy business that's allowing them to invest in and prepare for the future of mobility. With a market-beating yield, double-digit long-term dividend growth, a low payout ratio, more than 15 consecutive years of dividend increases, and the potential that shares are 22% undervalued, this clearly looks like a great long-term opportunity for dividend growth investors. And now for a special news announcement. Huntington Ingalls Industries Inc., stock ticker HII, just announced that their Remus 300 was selected as the U.S. Navy's next generation small UUV program of record. This new program will only add to their already giant backlog. This defense company stock has not moved up as aggressively in 2022 as a lot of other defense names such as Lockheed Martin Corporation, stock ticker LMT, which is one of my top 5 stocks for 2022. For comparison, Lockheed Martin is up 26% year to date, while HII is up only 9% year to date. This relative lack of participation is noteworthy, and it could be an opportunity. I shared the appeal of shares in Huntington Ingalls Industries in early January, showing why the shares could be worth almost $230 each. With the stock still around the $200 mark, this is something for dividend growth investors to take a close look at. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.